do a lot of B2B work, we do see the kind of demand or the kind of request that our clients look for. And generally what we see is there would be probably two main stages that a Web3 project will go through. So in the very early stage, when you don't have that internal capabilities yet, you don't have that internal expertise yet, my first advice is speak to an expert. You know, don't put your even for CTO, right? You're making all sorts of technology decisions, you're making all sorts of design decisions, and you don't know how it's going to affect you in the long term, how it's going to affect the scalability, right? So my first advice is always speak to a consulting firm that's actually able to provide you, let's say, like a CISO advisory service that can review your IS architecture, that can review your product roadmap, and then give you, let's say, a framework for you to understand, okay, here are my future investments that I'll need. Secondly, the other sort of clients that we see are the ones that are ready to scale, right? So they've hit some sort of certain traction, they've got product market fit, or now they're growing globally, regionally. Now, in this case, you want enterprise security, right? You want to treat yourself as if you are already regulated. So you should be proactive in seeking compliance. You should be proactive with your ISO. You should be proactive with your SOC 2, especially if you're running a centralized service like an exchange, right? So we're seeing this quite a fair bit as well. And, you know, very changed. You know, I don't want to spend the time on stage to do a plug, but there are solutions that we provide, like a managed SOC, right? So instead of like an exchange where, hey, you have to spend $2 million to build out your capabilities, both headcount, technology, and software, you can actually outsource that to us. We've already got the infrastructure, or we've already got the manpower, the expertise, the know-how. We can actually give you like a 2-3 year contract for you to grow while you're taking that time to build and develop your team. So there are things that you can do as a project, even within like the crazy Web3 immature security space. And again, my advice is just speak to the expert. Yeah.
Okay, thank you. So today in our panel, we already go through both legal and technical perspective of hack and treatment from current situation. So I myself hope that from our valuable lesson from the last summer and winter as well, we will have a more successful summer of crypto and blockchain coming in the near future. Yeah, thank you so much for joining the session today. Yeah.
Thank you so much for your insightful sharing. And now let's step forward for a group photo. Vâng, thưa quý vị, ngay sau đây xin mời quý vị cùng lắng nghe những chia sẻ hết sức thú vị thông qua phiên thảo luận với chủ đề How to retain users in bear market. Trong cuộc thảo luận này, chúng ta sẽ cùng giải quyết những vấn đề khó khăn khi phát triển dự án trong giai đoạn thị trường biến động. Đặc biệt tập trung vào các chiến lược để giữ chân khách hàng trong các sản phẩm tài chính phi tập trung, đồng thời chuẩn bị hiệu quả cho chu kỳ tiếp theo của thị trường. Please welcome to the stage our moderator, Ms. Shang Shang, Key Account Representative from trực, and our speakers, Mr. Kelvin Ngo, Vietnam Country Manager from CoinX, Mr. Lewis, Head of Engineering from Trust Wallet, and Mr. Check, Evangelist from Chainlink. Please welcome to the stage.
Morning, GM everyone and GM Vietnam. My name is Shan, I'm from trực, and I'm excited here today to kick off the discussion on how to retain users in the bear market. I think this is a very timely topic. I mean, in the bear market, we've seen VCs slowing down the deployment of funds. We've seen exchanges getting in trouble. We've seen users pulling out of the market as well. So very, very timely discussion, especially for all the guests that we have here today who are looking to build out projects and to build out their community in the current climate. So shall we kick off by a round of self-introductions? Your name, what you do, and also a little bit of about your background.
All right, thank you. Hi everyone, Xin Zhao. My name is Jake. I work for the training BD team. I've been at the team for a little bit over a year now. About 5 to 6 years in the blockchain space, and really looking forward to speaking with the talents here. Yeah, thank you.
Yeah, my name is Luis. I support the engineering team at Trust Wallet. We've been in crypto for almost 4 years now. My background is mostly in infrastructure and security.
Hello, xin chào. It's Calvin from CoinX. We are a global cryptocurrency exchange, and we are on our way to make CoinX to become the easiest exchange in the world for users to trade. So thank you very much for being here today.
Thank you. So let's have one question, just to kick off the discussion. I think there's been a lot of shifts in user behavior in the bear market. What are some of the changes that you have observed? Shall we start from Jake?
Changes in user behavior. One obvious user behavior is just like project just going MIA. That's the biggest challenge for just talking to user. I think a lot of users are mainly trying to really focus, especially in the bear market. They are having some user retention issues as well, and I think financial problem challenges is definitely something that we want to work with them and want to help them rebuild and ready for the next bull market.
Yeah, so some of the problems that we've seen in terms of engagement or retention, there's just not a lot of movement and activity. So it's really hard for users to know what should they be doing, what can they engage in, and so what are some additional service that we have to offer, certain features that we normally wouldn't do and we would have to offer them now, or give them a little bit more guidance. In a bull market, the market tends to guide the user, but in a bear market, the product really has to guide the user to show them new opportunities, give them new insights into what's happening, because the space could be a little quiet, marketing budgets are slower, projects are a little bit quieter, they're mostly in build mode, and so some of the challenges here is just letting the users know there's still some activity, targeting that activity, and then making them feel comfortable engaging with other dApps.
Okay, so talking about observations, I will talk about my friends. Many of my friends just tell me, hey Calvin, sell Bitcoin. It's going to be 5,000 soon. So this is my observation, buy some real estate, buy some gold. So basically I bought my Bitcoin at 18 and now it's become 30. So basically I think observation, many people afraid of the market, of the bear market, but many other people, they don't care much about it, because I think that this is like for organizations, we take it as opportunity to educate users about the true nature of crypto. It is not like daily trading, right? That is the way that people freely move their money around the world, and the true freedom of financial is more important than trading or profit, right? So I think there will be two sides. Some people very afraid of the bear market, and some people just believe in the true nature of crypto, and they don't care a lot about even bear market or bull market or tiger market or something.
Thank you for sharing. Yeah, I definitely agree. We do see a lot of changes in user behavior. People are like, oh, okay, it's bear market, I'm getting out of this. So for all of the projects building out there, what are some of the common pitfalls that you see in growing in this bear market, especially? Especially your observation, working with partners. Jake.
Pitfall. I think the biggest one that I would see is just projects are disengaged with their own community. A lot of times, community, they really support it from the project from the beginning, and they understand that we are in the bear market, but they actually want more transparency. Communicating with the project team, what they are building and how they are preparing for the next new innovations. So I think that's the biggest pitfall, that projects are starting to disengage with their community and not being transparency.
Yeah, I agree with that. I think that's a big problem. They kind of go back into a cave to kind of focus on their core issues and then kind of get distracted by that. I think the other thing I would add here is they move into areas that they don't have domain expertise or they're not comfortable with understanding the product or finding product fit. So they start building something that's not really a high quality, but they just see this opportunity in the market, they go after it, but in a few months it fizzles out. They spend a lot of engineering time, a lot of product time, and the product is substandard and there's no maintenance, there's no continuity. So then now you created features and an experience that people start thinking like, are they really building high quality experiences, right? So now you're introducing doubt, hoping to kind of capture the market. And sometimes it's better just to stick to your principles and just stay focused on kind of what's happening. Because I think most users now, to your point, understand it's a bear market, not a lot of big things are going to happen. They just want to see consistent experience and like go back to like the principles that those projects were founded on.
Okay, so for KX, we are not in a rush of like putting a lot of like coins or projects in our platform. Because for us, like the most important aspect that we concentrate on is security. So like for project, we do not look at them like they are crypto company or what their technologies are, what blockchain they have. We look at them like startup, and we look at them about the solution that they want to give to the society. So there will be three questions that we will looking for when we look at the project. Firstly, what solution you bring to the world? Second, do people need that kind of solution? And thirdly, of course, do people pay for that kind of solution? So look at them like startup, look at them like business. Even in bear market, like it's nothing like different for us, like from even in like any market, because we look at like project as company, as business, as like the one who make impact to the society, more than like any technologies that like very difficult for people to like approach. Yep.
Thank you. Definitely agree. Stay true to its core. And maybe I'll pass back the question to Kevin as well. I think especially for CoinEx as a centralized exchange, we have seen a huge change in the whole space, especially after FTX and SEC charges on Coinbase, as well as Binance. So how does that affect centralized exchanges, in your opinion, and what has CoinEx done to grow in this market?
Actually, of course, we are affected by like many issues in the market, especially from the media. Like a lot of bad news on the media and fraud, of course. But like for CoinEx, we always like focus on only two aspects when we doing business in exchange and many other like services. Firstly, it's security, and secondly, it's like easy to use. I think it's the most important thing that we focus on to make our users like secure with like what they're doing in our exchange. So I would like to have like to take the saying of John Lennon in there, in his song Imagine. So it's imagine a world without boundary. But actually the world we still have boundary. Try to go to US without visa, you will be like asked by the police right away, right? But for crypto, actually, it's no boundary. I receive my salary every month from Hong Kong without any, intermediaries, without any bank, and it's in 1 minute. So I want to come back about the true nature of crypto and blockchain. It's focused on trying to get the freedom to the people. First, in terms of like financially, and second, in terms of like no boundary in all the aspect of life. So for CoinEx, we are not focused on just like investor. We are not focused on just the community of like people who know cryptos. We focus more on like the whole societies. For example, we focus on the education for students in Vietnam and in many other countries about the true nature of crypto, of blockchain, what its purpose. And secondly, we are like more focused on sport and entertainment, which approach people easier and more effective. Like we are going to like sponsor a running competition in Vietnam soon in Hội An. So you guys can come later. Or we have a lot of projects related to music and KOL in gaming industry. Gaming is one of our concentration like strategy to in the coming years. So basically, CoinEx step by step educate people about the true nature of crypto and blockchain. So we are not in a rush. Because of that, we don't like have a lot of issues in terms of operation, and we are trying to be one of the most sustainable cryptocurrency exchange in the world. Yeah, thank you.
Agree with you on that. This is not the first bear market, and it's not going to be the last. Oh, so Louis, you're the head of engineering at Trust Wallet, and we have seen a whole mass adoption to crypto through wallets. But in the bear market, how has that changed your development roadmap?
How does that change the?
Yeah, how does that change your development roadmap, and how, for instance, in terms of user interface, any features that you're developing to still try to continue to onboard users and attract them?
Yeah, so some of the things that in the bear market, what we do is, there's a few different layers I would approach this, right? There's, what are the features that we can double down and increase that we know we have like a really high capability of delivering really fast. So for example, what's our core competencies is like delivering chains. We can deliver tokens, NFTs, staking support. This is Trust Wallet being like a multi-chain wallet. We have like wide support for EVM and Cosmos. We can go and like continue to like push the pedal on this even faster during a bear market. So we can really lean into that. And this gives users more access to coins. So we just added more staking support for like the Cosmos staking chains. We added more tokens across different chains that we didn't have before, and soon we'll have much more NFT support, right? So this is leaning into what we do really, really well. The second thing is like Trust Wallet, like one of the biggest complaints in all wallets, one of the biggest challenges is like security. So how do we add more and more security features, especially in a world where it's like there's a lot more like people are much more conservative, people are much more unsure, that there's a lack of confidence when they're performing a transaction or signing a transaction. So how do we engage users? And so this is really, Trust Wallet about a few months ago added a security scanner, and we're adding more and more iterations on this. So leaning more into these security features that the users find valuable during the bear market in times like this of uncertainty, that gives us more comfort, more confidence. And then the other one is not losing sight of the long-term focus. We know there's going to be a shift, and we can't compromise engineering standards and engineering quality and like our strategic bets, knowing that this is going to happen. Because when the bull market hits, there's no time to start building things new, right? Like at that point, it's keep the site up, keep the wallets moving, make sure nothing breaks, keep users happy. It's not the time to go start building something new and novel, because nobody cares. At that point, everybody just wants to experience crypto. So this is kind of how we're approaching it from our side.
Definitely agree with security, not just because I'm from SUDC, but also because that's how you put trust in Trust Wallet. So Jake, as evangelist for Chainlink, we have always heard that in the bear market, that's when you really see who sticks true. And I think that happens to a lot of, when it comes to business partnerships. So, how important would you say in building these partnerships, in helping you to strengthen your community reach and also to bring new users to your community?
Great question. So Chainlink is an Oracle service. What we do is we work with bring off-chain data and bring it to on-chain. A lot of our users are DeFi projects like Aave, Compound, Synthetics. So what we do, we have two strategies, I would say. So one is working with the current blockchain projects that have a large user base, and we want to work with them, understand what their needs are, and improve our product overall. And then the second fold, I think, is just providing more tools, per path for the next, bring more use cases. As we know right now, blockchain is still really at the really early stage. So for example, we recently launched a new product called Chain Function. So basically we can allow developers to connect their smart contract with any Web2, any APIs through a decentralized Oracle network. So for example, anything coming from like weather data, sports data, or even like Tesla cars. So we believe that, having this pathway to allow more tools for the next innovation and bring more use cases for the Web3 would be our main focus for the next one. And in terms of partnership, we are working with a lot of we got plan to launch a CCIP, so our cross-chain interoperability protocol. So we are working with Swift, to bring more traditional financial data and then integrate it to the blockchain. And we strongly believe that it's going to bring more use cases and really benefit the DeFi and also the blockchain industry.
Very insightful, thank you. Definitely agree. I think, especially in the bear market, it's not sufficient to only focus on the present users in Web3, but also reaching out to the next million users. And that's where you can leverage on your Web2 partnerships and network. Thank you.
Yep.
So back to Kevin now. As the Vietnam country manager, what do you think is something unique about the Vietnamese market and how they're interacting in decentralized exchanges?
Yeah, so I want to tell you a story when I interviewed with my boss in Hong Kong. So I told her that I'm not a crypto guy, I don't understand anything about crypto, but I think that crypto or blockchain or anything is just like human to human. I can connect you to people and they understand about crypto. I can connect you to university, I can connect you to organizations, and we are doing quite well now in Vietnam. So basically, I think that first, the adoption of crypto in Vietnam is one of the highest in the world because we have young population here in Vietnam and everyone have internet at home, right? So, and I think Vietnamese young people, they are quite curious about the world. And thanks to the government, we have no limit in terms of, exploring the internet world. We can learn anything on the internet, on Google, on YouTube, and stuff. So basically, the adoption rate of crypto in Vietnam is very high. And secondly, we can easily do many things like event like this without, the limitation from the government in terms of, legal limit on crypto, which is a very big advantage of market like Vietnam. And thirdly, the potential is huge because even though we have high adoption of cryptocurrency, but many young people and even older generations, they are still don't know much about the technologies. So we have a huge potential here to develop the market. So for CoinX now, we consider Vietnam as the third largest market that we focus on, just under the English market and the Spanish market. So basically, we're going to put more resources here to develop the market, and more importantly, to educate people about the true nature of crypto and what benefit it brings to the people and around the world. Thank you.
Thank you for sharing. Yes, Vietnam is definitely an exciting market, and I think that's the core reason that's bringing all of us here today. So, in light of time, maybe I'll just ask one final question. What is a recommendation that you would leave for our audience today? Many of them are builders in this market. Many of them are new to crypto. What final advice would you give them?
I think the success of any Web3 project relies on good data. We have a saying in Web2 saying, garbage in, garbage out, right? You had to get good source of data, secure data, and transparency data into your Web3 project in order for it to be successful. So that would be my recommendation.
Yeah, I think my recommendation is for projects to reach out to the community, look for new patterns, look for partners, even if you're not familiar with how to talk to other dApps, talk to wallets, talk to other people in the space, really ask for help. The worst thing you can do is go quiet. And so just ask for help, lean into the community, and I think this is something that Trust Wallet does really well, but it's something that we've learned due to our experience.
Okay, so my recommendation is very simple. I'm a non-crypto guy and I still live in this industry for more than 1 year. Crypto is not that complicated, and I think that it will bring more benefits if you believe in it, in the true nature of it, and believe in yourself and explore the world. So I think it's going to be more interesting life for everyone here.
Fantastic advice. Thank you all. Thank you, Jake. Thank you, Lewis. And thank you, Kevin.
All right, thank you.
Thank you very much.
Thank you so much for your sharing. Now let's step forward for a group photo together. Thank you. Kính thưa quý vị, trước khi chúng ta đến với những buổi tọa đàm tiếp theo, xin mời quý vị cùng hướng mắt lên sân khấu để theo dõi một vài video từ chương trình. Ladies and gentlemen, before we go back to our panel discussions, let's take a look at our screen for a video clip. Thank you so much.
In the vast expanse of the universe, technology is advancing at lightning speed. Amidst this rapid progress, Aura Network shines as a beacon of innovation and vision. A team of engineers and visionaries set out to build a new NFT infrastructure that would change the way we think about ownership and value. Imagine a world where NFTs could represent more than just digital art or collectibles. With each step, we are bringing our vision of a new future closer to reality. Join us in the journey of transformation, or a network shaping the future of NFTs and the Web3 realm.
Chào mừng quý vị đã đến với phần tiếp theo của chương trình GM Việt Nam Blockchain Week. Ngay sau đây, Thủy Tiên xin được mời quý vị đến với phiên thảo luận tiếp theo với chủ đề Digital Asset Infrastructure for Institutional Players. Trong chủ đề này, các diễn giả sẽ tập trung vào cách cung cấp cho các quỹ đầu tư Web2 các công cụ để phân tích thị trường, cũng như triển khai tiền vào không gian Web3. Các diễn giả là đại diện từ các quỹ đầu tư Web2, các dự án phân tích và dự án cơ sở hạ tầng. Thủy Tiên xin được mời lên sân khấu. Please welcome to the stage Miss Ali Jan, former CEO at Nachi Network. Mr. Moran, Director Growth at Consensus. Mr. Noan, Growth and Partnerships at Headquarters. And our moderator, Mr. Alex Nguyen, BD and Marketing Manager from BingX. Xin trân trọng kính mời các diễn giả và chủ tọa lên sân khấu để chia sẻ cho quý vị có mặt trong buổi sáng ngày hôm nay.
Morning all. My name is Alex. I'm a BD Manager with BingX Vietnam. Today I'm going to be the moderator for this session. A bit of bad news. One of our panelists probably not going to make it. So we will just try to wing it. Today's session, we will talk about the digital asset infrastructure for institutional investors. This is quite an important topic because we're starting to see a lot of big Web2 VCs starting to eye the blockchain market, right? So I will get you guys to firstly to introduce yourselves a little bit before we get started on the questions.
Okay. Hi, everybody. My name is Noel. So I lead growth and partnerships at Headquarters. So Headquarters, essentially what we do is a finance back office tool for Web3 companies. So we focus on a few things like crypto accounting, treasury management, and as well as financial operations like your payroll.
Hi, I'm Ali. I'm the former CEO of Nakji Network. My background is all in data infrastructure, making sure that blockchain data is very easily accessible by anyone who needs blockchain data.
Right, let's get started. So we have around 25 minutes. I think we'll shave some questions. We'll start with question number one. As institutional investors showing increasing interest in blockchain market, what tools and what infrastructure do you believe are essential for them to comprehensively understand and analyze the market, the space?
Yeah, I think first of all, everything starts with good data, and good data means reliable data, like data that you're able to get with low latency, get data fast, get alerts fast, and be able to trust that data, right? If you have, let's say you have 1 million data points, but you're missing one critical one, then you can't trust any of that data. And so I think institutional players really need these institutional quality data sources in order to build additional tools on top of. But
No, do you want to add to that? Yeah. Next, when it comes to data analytics, what factors and metrics do you consider the most critical for big VC firms to evaluate blockchain projects and the digital assets? And how can analytics provide valuable insights and intelligence for the good decision making?
yeah, I think a lot of it is going to be similar to TradFi too, but it's like velocity of a lot of these assets, like how fast things are moving, who's holding, like how many wallets, things like that, right? But at the same time, like there's metrics. For example, with NFTs, there's floor price. There's there's open interest, right? There's a lot of these metrics that are the narratives change. There's metrics that are really important, that were really important in 2020, that are not necessarily as important today. And so I think it's really important for these platforms to be very flexible so that new metrics can be found very quickly and surfaced quickly so that people can change their narrative. People can change their strategies based on whatever narratives are out there very quickly.
So let me just add on that a little bit. From your experience though, do you see, do the platforms, do the companies that sort of provide the data, do they adjust to the trends quite quickly and do they catch on?
Yeah, I think for the most part, a lot of the data analytics platforms and the data providers today, many do actually allow their users to surface some of these metrics, right? Like there's, for example, with Dune, with Nansen, right? They allow people to build their own dashboards, and if these dashboards are really popular, then they get shared very often, and so I think they do already give some sort of outlet for people to be able to share the metrics that they think are important. But I would encourage people to think about like different user experience, different user interfaces on how to do that even better.
Cheers. So looking towards the future, how do you envision the development and advancement of digital asset infrastructure to better serve the needs of the big VC firms from Web 2 to, in terms of analysis, investment management and portfolio management?
Yeah, I can take this. So just to understand the audience a bit better, how many here are involved in a fund or even, founders yourselves or involved on the, finance side as well? Yeah, could you raise your hands, please? Yeah. Can. Yeah, so I think when it comes down to it, right, I mean, one of the things that over time crypto funds, after they are set up, is actually that they struggle with the fund administration portion of things, regardless whatever kind of fund you are, right? You want to track your net asset value over time, and not every token necessarily, for example, is liquid, right? And of course, what's your cost basis when you receive them and the likes, where you're trading from, whether is it on Binance, Coinbase, or even Uniswap, right? So all these different things, there's also different pricing points that you get them from, and you can't just exactly use CoinGecko or CoinMarketCap, because for compliance-wise, you actually need to use the most accurate pricing, which is ultimately where you purchase them. So this is all things.
Hello?
Does this work?
Okay. I think it ran out of battery. Yeah. Yeah. So all this, when it comes down to it, funds do need to keep it in mind. And of course, that's where tools like Headquarters, they come in. And this is not just a case for even funds alone, whether it's VC funds or trading funds, but it's also a case for any builder out here. Because ultimately, when you are regulated by any government, you should keep track of all your finances on the crypto side for accounting sake, and you need to declare it. So that's where, Headquarters, essentially what we are building is trying to help you track all this pricing data so you can work with all your accounting firms. And you also need to consider the on-chain data as well, right? Because you don't want to, over time, not calculate your fees correctly, which is where Ellie will be an expert in, right? And of course your pricing side as well. So 2 forms of data sources that you really need to consider.
Yes, thanks. We have a question on regulatory challenges and complexity around the topic. I'll probably direct to you as well. In order for the VCs to navigate around the Web3 space, what are the challenges you can foresee that they need to watch out for in order to navigate around the Web3 space while ensuring compliance?
Fair. So I think, there's always the digital infrastructure side, right, which was the topic I touched on briefly upon. On the Web2 side, it's very more established. You got folks like Kata, got folks like Capita, Sprout, and the likes. There's new players like Magna, VTVL coming out as well. But also you need to consider on the service provider side. And of course, where you register, how you register as. So these are there's no direct answer to it, unfortunately, right? You can always choose a friendly country like Singapore, Hong Kong even, perhaps Dubai, or maybe more popular would be Cayman and BVI, right? But then after you register the company, what do you register it as? Is it a crypto fund or you register as a normal fund? You've got a license portion to consider, but also you got your banking portion to consider, right? After you register, most of the time you have to end up knocking almost every bank door out there, unless maybe you work with a very good service provider who can get you set up right away with a number of banks. Why do you need banks? When you're raising a crypto fund, it's because of course, when it comes down to it, who are your investors, right? Some of them, they honestly might not even have a Binance or Coinbase account. They might just be wanting to have some exposure to crypto, and the best way will be through a fund. So they might pass you some fiat, and of course that's where your KYC, your AML comes in. Even if you receive USDC, you should potentially think of how clean is your money that you're receiving. So there's all these little things. Happy to chat on it separately aside next time, that you should really consider when you're setting up your fund or even really just your company, because ultimately this is a question, right? And what we've seen sometimes is on the builder side of things, what's really popular is you set up a development agency, and you call it a dev shop, and then you get your bank accounts and whatnot. Then you set up a separate crypto company, and the dev shop side will get banks, and you will invoice the crypto company elsewhere, which pays you in, like, for example, crypto, after you fundraise.
Cool. I think we are just about running out of time. So before we wrap it up, what are the key takeaways do you have for Web2 VC firms trying to break into the Web3 space? So what are your recommendations in let's say top 3 things that they need to keep in mind?
Well, I think stepping back a little bit is in the next 5 to 10 years, we won't necessarily see like a crypto industry anymore, or like a Web3 industry anymore, where it's just like how in the 2000s, right, there was an internet industry, but now everything touches the internet. So in the next 5 to 10 years, it's possible where just it becomes so mainstream that there's no like Web3 industry anymore, right? And so Web2 funds will naturally just have to invest into more and more blockchain technologies, even if they're not investing directly. So I think they should keep that in mind and get to know some of the technologies early, but watch out for the companies that are applying these technologies early.
I would say most of the time, if you're a Web2 fund going to Web3, just keep your eyes open, regardless what kind of investments you're looking at, whether it's on the equity side or the token side. And also keep an eye out for compliance and your fund administration at the end of the day. So that's something you should really think about before you enter the space. But most of the time, you might already have some exposure to Web3 unknowingly or knowingly, right? Whether it's through trends like Metaverse.
So as we conclude the panel, I'd like to thank our panelists. Thank you so much. And I hope that the insights that they provided will be useful to our audience. Thank you.
Thank you.
Thank you.
you so much for your sharing. Vâng, thưa quý vị, trong giai đoạn hiện tại của thị trường tiền điện tử, điều quan trọng nhất là khám phá các giải pháp và đổi mới đột phá có thể định hình lại toàn bộ ngành công nghiệp chuỗi khối. Từ quan điểm của các nhà đầu tư và tổ chức tiên tiến, ưu tiên đổi mới sáng tạo, các diễn giả của chúng ta sẽ chia sẻ quan điểm của họ về chu kỳ mới, nêu bật những lĩnh vực sẽ thu hút sự chú ý và tiềm năng đột phá. Thông qua phiên thảo luận tiếp theo với chủ đề What does the next market circle look like? Please welcome to the stage our moderator, Mr. Sơn Ho, Managing Partner from K300 Ventures. Và các diễn giả của chúng ta, please welcome to the stage Mr. Josh, Head of Digital Assets Portfolio, Animoca Brands. Mr. Oji, Investment Partner and Head of Asia CMT Digital. Mr. Andrew Lai, Founder at Newman Capital. Mr. Arthur Chung, Founders and CEO at D Finance Capital. Please welcome to the stage. Mời các diễn giả và moderator của chúng ta lên sân khấu ạ. Không biết là các diễn giả và moderator của chúng ta đã có trong hội trường chưa ạ? Vâng, thưa quý vị, trong lúc chờ đợi các diễn giả và moderator của chúng ta đến thì chúng ta có thể giải lao tại chỗ một chút xíu ạ. Please let's take a few minutes break before our moderator and speakers coming. Thank you very much. Vâng, chào mừng các diễn giả và moderator của chúng ta đã lên sân khấu và xin được phép bắt đầu phiên thảo luận của chúng ta ngày hôm nay. Let's get started.
Hi guys, so sorry for the delays. Actually there was some kind of issue in the VIP room and we don't know that it has been our session yet. So I think to skip all the delay things, I will do a really quick introduction about all of us. So the whole panel here today is about the new investment trend in both business and blockchain technology. And so we have the representative from the biggest investment fund in the blockchain landscape. We have Just You from Animoca Brands, Augie Ilak from CMT Digital, Arian Lai from Newman Capital, and he's also an ex-BlackRock, and also Arthur Chung from Defiance Capital, and me as the moderator. I'm Sơn Ho, the managing partner of K300 Ventures in Vietnam. So the very good thing today about us is that we all work in the same industry, so we are the expert in terms of investment. So yeah, so the very first question about for all of you guys, because I know that you guys have different view in investment, right? So what do you think about the next investment trends in terms of business sectors? So can you go first, Arthur?
Okay, yeah, thanks for having me here, everyone. I think we're at a transition right now. Bitcoin was launched in 2009, and we've been more than 10 years since the advance of blockchain technology. And the last 5 to 10 years, the infrastructure was not mature yet. So you've seen some of the biggest investment always go to the infrastructure protocol, the new layer ones, and everything to make blockchain usable. I think we are at an inflection point right now where it's possible to build a consumer-grade application that can cater to millions of users in blockchain and crypto. This is not possible 2-3 years ago. Like, everyone was complaining about high transaction fees, the terrible UI UX, but I think we are getting there. So I think the next cycle, we will see more crypto applications, decentralized applications that can cater to millions of users. This is something that in the past is very difficult to achieve. Yep. And I'm particularly bullish in terms of the use cases in the gaming side, because we look at a lot of different sectors, whether it's a good fit with crypto and blockchain. Gaming is one of the ones that have the best fit in our opinion. Yeah, the rest of others, like, you need to take many trades off, so it will be harder to get it started. But gaming is one that we are quite positive on. Yep.
Yeah. So how about you?
Yeah, I think two areas that we in particular are very excited about is one, the reemergence of Web3 social, and what I mean by that specifically is decentralized social networks, right? This is something that has been around for a while, but I think we're starting to see indications even from more traditional Web2 giants starting to move in this direction, right? 2 examples I can share from very recent history would be Threads, which many of you would have downloaded over the last week. In their roadmap, they explicitly talk about protocol integration with Activity Hub. Another, which maybe doesn't directly point to crypto as the answer, but suggests that business model innovation is required, is Reddit, right? And Reddit sort of preemptively trying to monetize their data through APIs and receiving very strong pushback from employees and from the community. Maybe given their affinity for crypto in the past and their ethos around community first, experimenting with business models more related to user-owned data could make sense. And so Web3 social, I would say, is one area of great interest for us. The other is, I anticipate enterprise blockchain use cases coming back into vogue, right? These are, in the past, obviously, they got a lot of flack just because most of the examples would be, say, us 5 known parties on a private implementation of Ethereum running our own validators, which sort of begs the question, why blockchain? But I think in a world of increasing deglobalization with siloed geographies and where we need to interact, coordinate, and transact with parties that we may not know across borders, blockchain seems like a decent use case for that. So these are 2 areas of interest for us.
Yes, so we already got gaming, social, and cross-chain decentralization. How about your idea, Josh?
Yeah, so I agree with everyone. So very quickly from Animoca, I guess our focus is really on consumer-facing tech, and I think in terms of the next cycle, next sector that's going to really flourish is the ones that can help onboard more and more users into crypto. So in the past, a lot of the crypto and blockchain has been revolving around trading, but in the future, if we're going to expand this to the broader audience, broader world, we need more consumer-facing products. So, for example, we have several projects and companies that helps to tokenize consumer content in the various forms and ways, like music, like education. We recently bought a company in Israel who used to do online education in the format of Coursera. We tokenized their content and converted the courses into NFTs and help to sell the NFTs for the teachers as a way to raise capital for the educational efforts. So that's a really cool way to kind of onboard another segment of the population into the power of crypto and blockchain. And I think that's probably something that's going to be more and more prevalent in the future.
Yeah, so it's like more like tokenization, right? So in education, music, and I also want to add something like many people are chasing nowadays, like real estate tokenization.
Yeah. And of course, games, right? We're known for games, but everyone knows that. So,
how are you? What's your idea about the newest trend for the upcoming 5 years, for example?
5 years is a long time in crypto. But I think overall the thesis is, Alfred mentioned, to bring the millions users to crypto. And I'm a practical person. So when you look at gaming and social, gaming-wise, we invested in Epic Games 4 years ago before a Travis Scott concert. And we invested in Immutable Eggs, which is also AAA studio stuff. But I think casual game is more the way to go going forward. Free studio game, honestly, doesn't require much blockchain-related stuff. We invest in all that to hedge against the risk. But casual games, I think, is the way to go for onboarding crypto. In terms of Web3 social, we invested in Reddit 5 years ago. So before anything in crypto, Reddit is obviously a forum for anyone to interact with each other. But for social, I don't believe we are going to have a decentralized Instagram, Twitter per se for the next even 5 years. I think it is going to be tough, and obviously in terms of business model, we have all the data returning to users, all that thesis, but it's more about business model, right? In terms of businesses. So for us, we are looking at a subsector within the social/entertainment, specifically for animations and VTuber business. I think Animoca has a huge part of that in Japan as well. Recently, we invested in one platform which allow any users to create animations, talk to the animations, have video call with them as well. I think that is more practical instead of talking about just being decentralized Facebook. I think Thread is one very different example. If they are able to onboard 17 million users because that's Mark Zuckerberg, it's not going to be something like Lens Protocol able to achieve in 2 or 3 years. So that's my viewpoint.
Oh yes, I agree. Actually, the animation business is really in particular, I'm really a fan of anime as well since secondary school. Yeah, so we've got all the potential business sectors here. So how about the opportunities and the threats for the upcoming times? I just want to know your ideas about the views of an investment fund. Because for retail investor, we are on our own, right? But because you are managing an investment fund, so I just want to know your point of view in opportunities and threats. So the first one I want to ask is Alak.
Sure, yeah. If I zoom out even from Web3 and just talk about the VC asset class as a whole, I think it's under immense duress right now. You see the bluest of the blue chip venture funds raising 20 to 50% smaller funds than their previous vintage. And I think LPs are starting to ask fundamental existential questions like, we're no longer in a risk-on environment. The risk-free rate is 5%. How much do we want to allocate to this particular asset class? And how do we want these funds to operate? You guys say, you live and die by the power law, but why must it be like that? Why must you have 10 bets, 3 return the fund, and the rest go to 0? Maybe I, as a liquidity provider, want to have a sort of different construct, a less risky construct. And so I think those types of conversations are starting to happen. I think in general, the business model, the portfolio strategy, the portfolio allocation of venture will look very different. And I would anticipate the winners of the next 20 years might look very different than the winners of the last.
Oh, yes. So do you have any more you want to add to that, Josh?
Yeah, maybe I'll take a little bit of a different direction because I manage the balance sheet, the liquid book at Animoca, so it includes all the treasury and tokens. So I care about directional views of the market quite significantly. So if I look at the market now, we're still in the bear, but I think we're about to exit the bear market, leading by BTC and ETH. Going to essentially 2024, which should be a pretty exciting year. I see 4 or 5 major catalysts, right? So one catalyst is we all know how bad regulations are in the US, where SEC is throwing out these lawsuits with zero clarity. But now that it is as bad as it can get, it can only get better, meaning that when these lawsuits hit the courts, when it becomes more clear, there's going to be a little bit more transparency in terms of what should be done and what can't be done. And that's going to be much better from a sentiment point of view going forward. So that's one. And then number 2 is, in our region, in Hong Kong, especially where I'm based, regulators are very, very in support of Web3 and crypto. I had meetings with HKMA, is the Fed of Hong Kong basically, and SFC regulators, and they're all looking for ways to push banks to adopt and onboard more and more crypto companies, exactly the opposite of the US, right? So from adoption and from a capital flow perspective, that's improving in this region and this part of the world as well. I guess thirdly is that, from a headwind perspective, we had more, a year or so of rate hikes. Now, of course, we still have a bit of to go for the remaining of the year, but ideally in 2024, the inflation should normalize and then rate hikes should flatten, and that becomes a tailwind instead of a headwind, right, from a technical perspective. And then finally, we have the hard fork in 2024, which is always a mechanically bullish event, right? So I think a lot of things are kind of like lining up to give us a more of a bullish picture in the market in 2024. So I'm sort of positively and bullish leaning in how I'm positioning the portfolio.
Yes, I see. So you are taking the view like in a macro view from regulation and to something like the Bitcoin halving as well. So Arthur, I would like to ask you for the upcoming season, like let's say 2 to 3 years time, do you think there's any shift in the investment strategy from the VCs?
Yes, I think like what Augie have mentioned, there's a big question about the VC as an asset class as a whole. I think you are going to see VC putting a lot less investment into the unproven stuff. I think because that has burned too much capital already. So I think if you ask more like, not just an idea and a concept, but you actually want to see data supporting it. So for our fund right now, we actually try to be as data driven as much as possible. Like sometimes you let the data to lead you to certain kind of answer. So instead of just making, metaverse, we are, it's going to be like a 10 trillion economy in 10 years. You actually see, is the data telling you that is happening? So I think this is what's going to change. People are going to like ask more questions before they commit to some concepts. And I think it's the same in crypto. During the bull market, a lot of the business model are ultimately not sustainable. I think one of the best example is the centralized lending and borrowing platform, because like when they are paying like 12% to attract the depositor, but they're actually only able to lend it out like at less than that or around break even. The whole business model never makes sense in the beginning. I think that these kind of things is gonna like a lot harder to get funded. Yeah, like in the last 2 years, even though the business model at that point of time doesn't make sense, people always hand wave saying that when they achieve economies of scale, you'll be fine. But I don't think that will work going forward. Like people are gonna ask like is this business model even gonna work? Yeah, so a lot more like back to fundamentals. Yep.
Yeah, really agree, because like everything in the world is now data driven, right? So data driven, when we look at one project to invest in, as for the data, and also we should also focus more on our data regarding our portfolio, like which field, which sectors, how's the business and product team, etc. And how about you, Arian? What's your idea about the investment strategies for the upcoming season?
Well, I'm not a trader, so unlike some of you manage liquid portfolios, we are more in the primary market, even though that I actually support Arthur in what we discussed before in terms of liquid ventures, so investing in the secondary market, even like a VC. But from my perspective, there are two things. The first one is in terms of geography. So I think there are 3 factors for me to decide whether geography makes sense or not. It's always about the number of developers, the number of users, and number of talents, and it's not US. So, and for me, I like to look into emerging market, whether it's traditional or crypto investment. So there's not much real frontier market now, except Africa and some part of Southeast Asia. So I don't consider Thailand and Indonesia as emerging market, but something like Vietnam, South Africa is area that we constantly look into in terms of primary market for now. And the second is, I think opportunity comes when the market overall evolve and get mature. In terms of token specifically, I've been constantly thinking about how tokenomics could evolve for a next cycle. And there are 2 things I think could be interesting. The first one is in terms of really having the multiples for a crypto market. A product could be having a lot of users, the token value could be 0, vice versa. and how we could have multiples for a next bull market, potentially that the price of tokens could link to the revenues or number of users on the platforms. It could be a high multiple, it could be low multiple. We don't have that now. So I think that makes sense. And the second is the token vesting schedule. It never got improved over the past 6-7 years. It's always about 2 years vesting. No matter how much the team has delivered, you got to vest over 2 years. And I think it should evolve into a more a consortium agreed or a group of people agreed with milestone-based token vesting instead of time-based vesting. I think VCs for us, we have the responsibility to figure that out and for the overall ecosystem to evolve. If tokens is not gonna evolve with this, I don't think primary and secondary market matters. At the end, it all goes to zero. So I think it's our role is actually to make that happen.
Yeah, really agree about the market competition as well as the token vesting schedule, because for the last 2 years, most of the pumping multiple were based on the vesting schedule because the market cap when they release is always low, right? That's why they got a lot of multiples. I think for the next few years, we are gonna be have more favorable format in terms of vesting schedule. We are still trying to do that now, but I don't think we have all come to an agreement yet. Yeah.
So actually, there's a funny anecdote. I was like, in the old Wall Street, there's a saying, they ask the financial advisors, where are the customers' yard? And I think in crypto, we should ask, where are the VCs mentioned? Because I only see founders' mind mentioned.
Okay, right. So we've seen that the biggest adoption for blockchain technology is mostly about finance, right? So for finance, we got centralized finance and decentralized finance. Recently, many centralized finance organizations have been adopting blockchain technologies in their daily tasks and the expansion plan. So how do you think this will affect the next cycle? So this question I want to ask Alok. Yes.
Yeah, I think we're definitely seeing a lot of technological changes coming about that I think will impact the category. And I hesitate to mention this because everyone's expecting it, but I do think that AI will have some impact. There are some unnatural intersections, and I think we're still working our way through that just given the hype that exists around the category. But in my mind, there are also some natural intersections. Let's say on the image verification side of things, how to determine whether or not something was in fact generated through AI or is a real photo. That seems like a decent use case for an immutable ledger, for example. Or maybe on the data acquisition side of things, where when we start to build more vertical specific models on top of these foundational ones, you need specialized data for that. And maybe that specialized data is best captured through a incentivized global network, for example. And so I think that is one area of interest for us. Again, not sort of blanket, but across specific areas of the ML value chain. So yeah, that's one topic.
Yep. Yeah. How are you, Aaron? What's your view about the adoption in centralized finance for crypto?
I think we don't invest in DeFi much anymore. It's not that I'm not a believer in DeFi. I think DeFi is the biggest innovation in crypto. But I think it's ironic to trying to combine centralized finance and DeFi. The whole purpose of DeFi is to kill the freaking banks on Wall Street. So you're looking at JP Morgan and Goldman Sachs, they're adopting DeFi. I think it is such a joke. I was posting on Twitter yesterday in terms of, I was at BlackRock, and Larry Fink said Bitcoin was a fraud in 2017. He said it was the next innovation yesterday. So I guess it's going to be going to extreme ends. For DeFi, it has to exist. It just matters on how the DAO and governance evolve over time. I think Uniswap is leading the way for having this to happen. And regulations might not have a role even in those projects. Provided if not based in the US, you could have more innovation of DeFi out in Asia. For centralized exchanges, which I'm also a supporter of because a lot of retailers could get in crypto through centralized platforms, and Hong Kong is pushing a lot of them. But honestly, there's not much innovation could come out from those platforms. It's really about volume of traders and others. Market makers are trying to get in Hong Kong to market made on exchanges. I don't see a lot of interest, to be honest. It's all about volumes, and volumes is going to decentralize finance. So I think for the next cycle, I wouldn't be investing in financial applications because there's uncertainty there. DeFi-wise, I'll probably just buy in secondary market for existing established ones, and the winners, Uniswap, Aave, and probably I'll ask Arthur which one to invest in.
Yeah, we're all like DeFi guys here, right? So we all agree that centralized finance is somewhat a weight. The first one is to create hype for the decentralized finance. The second one is that they act as a bridge to connect the Web2 users to Web2 users. Yes. So, Josh, how about you? How about you share with us your view about the development of the decentralized finance?
Sure. I mean, so my background is from traditional finance. I've been a hedge fund manager for like 16 years. So I can talk about this for like an hour. But in sake of time, right, I think what you mentioned, that one particular point where you mentioned the bridge is important. For better or for worse, like centralized finance and, you know, it's going to be around for a very, very long time. And for our industry to evolve and prosper, like we need to play with the centralized guide. We need to play well with the regulators, right? And if we play well enough and set up the bridge so that there's more and more capital going from the centralized world into crypto, into the decentralized world, into Web3, right? It's better for essentially everyone. Now, we had a couple of step backs last year, right, that really eroded the confidence of the traditional finance world into Web3, and that's the whole issue that a lot of us are facing from either from a VC perspective or from a liquid book manager perspective, right? And hopefully, eventually, over time, we can rebuild that trust through decentralization, through more good rulemaking, good regulation, so that we can have that bridge built back up, and then we have more of that capital coming back in, which is just going to be a lot more positive for everyone in this industry.
Yeah, agree. And we have the last one, Arthur. How do you think about how the decentralized finance will progress in the next few years?
Yeah, and I think there's a few ways to look at it. I think you will see actually more, continue to see the bridge and the integration happening. I was very bearish on security token and real world asset tokenization until recently, because I think that there's finally one catalyst that make this change. Treasury bill is at like more than 5% right now, and I actually think this is one of the very few products that actually will get product market fit in crypto, because there's still a lot of friction, even though you are like fully KYC and compliance to move your money in and out to from crypto to like traditional world, and the bank doesn't like it if you do too much in and out transactions. So I think if you bring Treasury bill on chain or the risk-free cash management product, a lot of the like crypto natives that for various reasons just doesn't want to move their money in out of crypto that often will want to use this product. So I think I'm finally seeing one real world asset that makes sense in crypto. I am a bit bearish on real estate because I think real estate is in the middle of the risk spectrum. You are not risk free enough. You're also not high, potential return is also not high enough. So I don't actually think, and also the liquidity is usually quite bad as well. So I don't think real estate generally will get that much adoption in crypto, but T-bill will. But I think on a second related point is, I think if you're building financial protocol in crypto, there's no middle ground anymore. I think that the world of regulatory arbitrage is almost coming to an end. You can't run hide and seek from the regulator and you say you're incorporated in Seychelles or whatever, and then say, oh, I'm decentralized. I think if you're running CeFi, you just have to pick a place that you are comfortable with the regulation and just really comply with it, or you become fully decentralized. I think a lot of the DeFi protocol were paying lip services to the whole decentralization, but I think they can't do so going forward. I think in the future, if you really want to become a DeFi protocol, you have to commit to decentralization and from the full stack, not just everything as decentralized as possible. It's not easy, but you have to do it because else the regulator is going to come after you. So I think that you see more like DeFi have to be really decentralized, and then you see CeFi are really like like a traditional finance, they are fully compliant, play by the rules. Like no more the hybrid bastard that in the middle that doing regulatory arbitrage and end up causing the disaster to everyone. Yeah.
Yeah, so I think the time is actually up. But however, since we rarely get every one of you to sit on the same panel, just want a really quick advice from every one of you about the investment for the retail investor as well as institutional investor here. Really one quick advice from each of you. So can you go first?
So I think just quick one, if you do not really have that much time, the best risk-adjusted asset to invest in is still Bitcoin and ETH. You're not going to get 100x or like 50x, but you're going to get like probably 2-3x over the next few years without like the risk of going to zero. So for other smaller coins, you need to do in the homework, else you are most likely becoming someone else's exit liquidity. So,
yeah, how about you, Alak?
Yeah, I guess maybe for VCs, I would encourage that we eat our own cooking, right? The advice that we dispense to founders around managing burn, deploying with thought, following those rules, just because in this environment it's uncertain when the next dollars might come.
Okay, so quickly for retail traders, just never use leverage. Just don't over lever. Just buy the BTC and ETH, like mentioned, and just ride it. Just don't use leverage and get blown out.
Yeah, hold to die. How about you, the last one?
I think I advise retail just to buy Bitcoin and Ether, but not other cryptos. But overall, for VC, I think you just need to know what kind of things you like as a VC, whether you want to go for decentralization or you want to go for a combination of Web 2.5 and those kind of things. It's a completely different skill set. As we already mentioned, that it's going to be extreme end of the spectrum. So I think you just have to know, if as a VC, what kind of VC are you in for a long term.
Yeah, so we got really great advice from our panelists here. So I think this is all it for our panel here. Thank you guys for attending our panel today. Yeah, thank you for listening.
Thank you so much for our moderator and our speakers. Please step forward for the group photo. Thank you. Let's take a group photo together. Yeah. Vâng, thưa quý vị, ngay sau đây xin mời quý vị đến với phiên trò chuyện tiếp theo với chủ đề Trading is universal. The fundamental use case of blockchain is the ability to exchange digital assets. Tại phiên thảo luận này, chúng ta sẽ đi sâu vào trường hợp sử dụng cốt lõi của chuỗi khối, trao đổi liền mạch các tài sản kỹ thuật số, khám phá cách công nghệ chuỗi khối đã cách mạng hóa việc trao đi giá trị, dân chủ hóa hệ thống tài chính và mở ra các cơ hội đầu tư mới. Có được nhiều hiểu biết hơn về khả năng mở rộng, hiệu quả và vai trò của các sàn giao dịch tiền điện tử mới nổi trong việc tạo điều kiện thuận lợi cho trải nghiệm giao dịch không ma sát. Let's welcome our speakers and moderators to our fireside chat with the topic Trading is universal. The fundamental use case of blockchain is the ability to exchange digital assets. Please welcome to the stage, mời lên sân khấu Mr. Henry Liu, CEO of Pixie. Mr. Ranji, co-founder at Orderly Network, partner at WOO Network and Chronos Research. And our moderator, Mr. Yu Chin Min, Business Development from Ancient 8.
Testing. All right. Welcome everyone to our panel. Fireside chat. So I hope that everyone's having a good time at GM Vietnam. Maybe our two speakers can just give a short introduction about themselves and what you guys do. Yeah.
Sure. Hi, I'm Ran, co-founder of Orderly Network. We are a permissionless DEX infrastructure, order book infrastructure, aiming to power the next generation of Web3 dApps for their liquidity needs. Thanks.
Hi, I'm Henry. Nice to meet everybody. We are a centralized exchange. We operate globally. We offer a platform for spot futures trading as well as many different payment services. We also focus a lot on infrastructure building at a group level where we operate other exchanges and wallets as well. So anybody who has a need for building a new wallet, an exchange, or any sort of financial application on crypto, we provide a large team globally that helps scale these businesses and also focus on fiat on and off-ramp services for the needs of onboarding into crypto.
All right, thanks for that. So, as you know, like the topic for our panel is trading is universal. The fundamental use case of blockchain is the ability to exchange digital assets, right? I think that's quite a loaded statement. I just want to ask you guys, do you agree with that statement, or do you think that there's other better use cases for blockchain?
I definitely agree with that statement. I think it's the most proven use case so far, whether you're talking about centralized or decentralized world, exchanges such as Bitsy, Binance, and others, they are kind of top of the pyramid for the crypto industry. Most of the revenues are and activity are captured in these exchanges, and the primary use cases for trading. Hundreds of billions of volumes go through them, and more recently in DeFi, which is kind of what we focus on at Orderly, I think is kind of the future of where trading will be, as blockchain is a natural place where trades should settle without the need for extra steps of settlement, extra time, extra costs, auditing, and such, as everyone can use the shared ledger that is the blockchain for this. And then settlements can happen in real time. Accounting, everything can happen in real time instead of having some sort of a lag in with multiple intermediaries. So I think it's actually a perfect use case for the exchanging of assets.
Broadly agree. I think the wording of that statement is could be more specific. I think trading is one application on top, and I think the fundamental application sits at a level above that, right? So the fundamental application, I believe, that has been seen on top of trading or beyond trading, and also falling in the same line with it, is more so really just permissionless capital coordination. When we talk about DeFi, when we talk about all these different use cases we've seen in the last few years. But overall, it's actually internet native money, internet native financial services across the board. Trading just happens to be something that powers liquidity, powers the investment, powers everything that is behind that. So I think the statement itself is accurate. However, it could be more generalized than just trading as a fundamental application.
All right, thanks for that. So I think just now what Ren said, that he thinks that DeFi should be I mean, decentralized exchange should be the biggest thing. And then Henry, obviously, you work on a centralized exchange, right? Do you agree with that statement, or do you think CeFi should be the bigger thing here in trading?
I think they target and they serve different customers and different users. So when it comes to DEXs versus SEXs, so DEXs are decentralized exchanges, SEXs centralized exchanges for the people who are just learning about this now. It's been very obvious in the past that the goal of a DEX, beyond the freedom for the users to connect a wallet-to-wallet trading, is for it to, as a project or as a product, is to perform as good as a centralized exchange, or try to accomplish that. So many DEXs we've seen in the past, they kind of fail at that, so users tend to fall back to centralized exchanges. So I think there's a very distinct difference between the two different types of products and services. Ran would probably be better at talking about this topic. They obviously have a project that's very successful, Orderly Network, and just as a disclosure, we are an investor and contributor to Orderly as well, and looking for ways that centralized exchanges can work with decentralized exchange infrastructure.
Yeah, so Ren's Henry brought up a very good point. Do you think there's any way that Orderly can work with a centralized exchange, or would you be mainly focusing on decentralized exchanges?
Yeah, so we're actually working together. Bitsy has been building on top of Orderly. More details to come, right? I think the the world is moving towards more transparency, right, with kind of what's happened with centralized exchanges in the past. But I do think the two are not competitive. I think they're actually very complementary. I think what happens in the future is kind of like what, on the previous panel, what Arthur said. I think it'll be regional centralized exchanges governed by local regulations, and that's kind of the on-ramp, because I don't know how you decentralize KYCs and fiat, right? That's the on-ramp for users, and then that's step one, and then step two would be the infra that's behind it, right? So a lot of the infra now is built in-house by centralized exchanges, but I think that's going to gravitate more and more towards just composable using decentralized finance, whether it's yields, aggregating yields, or aggregating liquidity. In the case of us, I mean, the composability of DeFi makes it that CeFi eventually, I think, it's very difficult to compete on liquidity and yields without aggregating DeFi, because DeFi is composable. So by nature, with siloed liquidity and yields, it's tough. Whereas the CeFi acts as a gateway, and this is going to happen with fintech firms as well and banks, I believe, and that will route liquidity and yields through all of DeFi, and that better services their users, and they can scale up fast and iterate really fast. So I think that's what's actually going to happen. So then, by design, we're actually infrastructure. We're not trying to be step one for the users. I mean, that's done by the wallets, by the fiat on-ramps, by the fintech firms, and by the banks. We're trying to be the best infrastructure and the most permissionless infrastructure available for these front ends or these gateways to adapt.
Right, you guys heard it here first. Some alpha from Ren's right there. All right, so let's move on to the next question. So security is the most important thing in the industry, right? So do you guys want to talk about what you guys are doing on your platforms, each of your platforms, to make sure that users are protected, make sure that funds are protected and everything?
So for centralized exchanges, I think it's quite straightforward. You look at a lot of the type of security protocols that are in place and the type of infrastructure that needs to be built. It's been proven in the last number of decades what large financial institutions have. Crypto exchanges, crypto wallets need to also work to that level of professionalism, that level of certification. So whether it's external providers, they cannot cheap out on the type of security that they're having. I mean, we're talking, what's very important that people don't realize is they're not just like a project that holds somebody's altcoins, right? You're talking about people's money. This is their income, this is their savings, this is their investment. So it's very important that at a centralized level, the security is good. At the decentralized level for DEXs, now that's up to the project itself, and it's up to the user's ability to control it. So there's actually, on that topic, there's a vast difference between the pros and cons of a DEX and a SEX, which we can also discuss later.
Yeah, on the decentralized side, I mean, the risks that people are well aware of are the hacking risks, right? There's hacks all the time. It happens with external parties, it happens internally. So this is one thing that we're very well aware of. In terms of our track record, the decentralized products we've built at Orderly and also at Woo has not experienced a hack, knock on wood, right? So auditing is obviously a thing that we go through multiple audits to ensure that the code is transparent. And because the code is transparent and open sourced, there's auditing automatically done by the users who are developers, right? So then bug bounties kind of crowdsource that feedback, and we try to iterate and improve the code. So I think the process of iteration actually happens faster because it is transparent. And an additional thing that we do for Orderly now, in terms of, if you look at decentralized order books, we actually make sure that, there's two issues, right? One is security and transparency and decentralization, the other is performance. So it's tough to get CX performance in DeFi now due to the existing technology available today, right? But that's changing with layer 2s and layer 3s and other faster layers and secure layers that's coming. Currently, our matching engine is off-chain to ensure performance, because ultimately that's what people want. But they also want security of assets. So then we have custody contracts on the chains for people to deposit into their assets. And we make sure that everything settles on chain in a timely way, right? So every block all the trades and balances are settled. So that in case the centralized matching engine does fail for whatever reason, people can readily withdraw their assets as the amount that they should have. And this is done on a block by block basis, right? And eventually we want to put everything on chain, including the matching engine. But that's an additional step we do to protect users' assets.
Yep. Just now Ren was talking a little bit about liquidity, so I think I want to talk a bit about liquidity. So we all know that liquidity is a key factor in the success of any digital assets, right? So how do you address the liquidity issues at the centralized exchange level and at DEX level?
So at the exchange level, we address it by working with the different market makers and liquidity providers in the industry. We vet out which ones are the top performers and who are the healthiest for market participants, and we engage them in the conversation of how to make markets and how to participate in our exchange, so that we have a place where pricing and everything's very transparent, very fair for the trader, in order for us to continue to grow as a company, as a platform. And there are a number of players in the last year that have also fallen out, given kind of the year of 2022. So we continue to look and seek out for more partners. We continue to look at who are the best key players in the industry and service them. We ourselves are not a market maker, but we provide a platform to be able to provide a very, very good place for liquidity providers, market makers to trade. Now, when it comes to decentralized exchanges, I think an example or a way I'll paint this picture is it's almost like a permissionless slot machine, right? You don't really know what's going in and what's going out, and you're just going to spin the wheel. And that liquidity could be there today, it could be there, it could be gone tomorrow. You don't know exactly what's going on behind the scenes in terms of the amount of coins that are being issued on a particular asset you're trading. You could, if you dug into all the smart contracts and look at it, but even then there's still many exports. So I think that what happens in a centralized exchange model for liquidity versus decentralized exchange model is two very different analogies and examples. And the permissionless slot machine one, I think, is one that I've always thought of for DEXs.
Yeah, for DeFi, I think the AMM is a very super innovative example of liquidity provision on Ethereum, the high-cost chain, right? And it proves that we can actually make anyone a liquidity provider. But then there's issues with that, right? So I think there's a broad spectrum of liquidity providers out there, and Henry mentioned like the market makers. The market makers are the pros, right? They provide liquidity, they quote very tightly, they take on risks, they're good at it, and in turn they get compensated through what we call the bid-ask spread in the middle. So these guys there's not that many of these guys in the world, and they're professional teams, right? Like the Jumps of the world, the Tower Research, and such. And then Uniswap's ability to make everyone a liquidity provider, that's also pretty good. But then there's issues with both, right? So with AMMs, there's obviously issues with permanent loss. The people who are LPing, they don't really know if they're making money or losing money. Chances are they are losing money if the counterparty, the person on the taking side is a pro, right? So that's the problem with AMMs. And I think AMMs are actually most suitable for stablecoins due to the fact that they're mean reverting by nature, and also for assets that people don't care so much about price, about slippage and price, like altcoins, like newly listed coins, where people are just punting on a new asset. So I think AMMs are just suitable for these certain types of assets. And now there's newer versions, like what Trader Joe has, with gravitating towards an order book with more customized liquidity provision for retail. So I think there's a spectrum of liquidity provision now, from the pro to the general. And then the good thing about DeFi is it can all be used, right, and aggregated. At Orderly, we're using market makers, professional market makers now, but we will add liquidity pools for the average Joe to provide, and access similar to trading bots, for example, that allows people to just pull in money and then quote markets. But then the simpler the liquidity provision algorithm, the easier it is to potentially lose money for the LP. I mean, there's no perfect situation here, so I think it's a balance of everything, and hopefully it all comes together to provide maximum liquidity while having adequate compensation for the risks that they're taking for each of the liquidity providers.
All right, interesting. I think let's look beyond digital assets now. So, blockchain technology, do you see it expanding to the use case to like facilitate any exchange of any other assets, like such as like real estate or whatnot? I think like Arthur just now was talking about T-bills. Do you agree with his take, or do you see like blockchain, supporting anything else?
I think as it's got a fundamental thesis, right? Blockchain itself, and obviously crypto being one of the first primitives on that, is you have the ability to do anything. I mean, even as I would say, Arthur's pretty accurate on the real estate side. I personally wouldn't. I would take his side, his opinion on that one. I wouldn't have our portfolio lending against real world assets that include real estate rates like that. We want very liquid things in our portfolio. But when it comes to other applications, one of the more discussed ones recently has been things like SocialFi, for example, right? So I know there are the common topics, but the more uncommon topics would be something like a SocialFi application, where you have these kind of like the financialization of social media, things like that. I think these are all applications where blockchain plays a big part, right? It all ties back to, in the end of the day, programmable money. It all ties back to programmable finance. But yes, I think there are different various verticals that people are building on that are using the fundamental use case of blockchain for the freedom, the speed, everything that it brings.
How is it?
Yeah, well, I think every asset should be exchanged on the using blockchain, if possible. I think it's the natural demand is pushing in that direction because it increases accessibility, right, to global people, and it decreases the speed of transaction, and it decreases the time of settlements for any asset. There are assets already trading, in crypto, whether it's synthetics or perpetuals of real-world assets. But then, I mean, the key constraints here is compliance and regulations, right, for these assets. If it's stocks, then that's obviously most regulated, and then commodities and FX is kind of less regulated. And I think these are kind of the natural ones that some are is already trading. When it comes to like real estate, bonds, and more illiquid stuff, I think having it on the blockchain, again, it's more accessible, it's more composable, and it's and the accounting is much easier, right? So then it naturally should have more liquidity, and then the issuers all want more liquidity, but it's the compliance, it's the regulations that keeps the real players from coming in, right? So I was talking to some TradFi guys, and like they can break down a bond or a piece of like esoteric, like illiquid real estate into many, many pieces for retail, but they're only allowed to service their accredited investors. So no matter what, so I mean that's kind of the value proposition for the blockchain, but then the hindrance is on the regulatory side. So, but the technology, I think, certainly is much better than existing for any type of asset.
Yeah, I think the technology is ready, but the regulations are not, right? So like touching on regulations a bit, like regulatory compliance is a big issue for like I think most of us, right? So like how do you guys ensure that you're complying with the regulations with the the ever evolving landscape, right? Like what you see in Hong Kong and stuff. Yeah, maybe Henry, you want to start?
Yeah, it's a difficult one because tying into your previous question, I think that overall this blockchain use cases in terms of financial programmable money and covering everything that has to do with capital markets, super sensitive to regulators. But blockchain can also help regulators, and that's actually the approach that we want to take when we go into different countries. And just to recap from earlier, I think what Ran was saying, he was talking about issuers, I think, and the regulators, I think there are 4 categories of which the fundamental use case of blockchain is helping, which is, Ran was saying the issuers, you were saying the issuers, regulators, fund managers, as well as you were saying about the issuers of cryptocurrencies, right? So when it comes to issuance and when it comes to trading regulation, Asia, I think, is a lot farther ahead than the rest of the world now. In the US, it's very difficult. I think one of the things that we face as a centralized exchange when getting regulated licensed, and we do hold several licenses across the world, is regulators come and ask us, are the assets safe? That's the first thing. Are the user assets safe? Show us how it is safe. Show us how your technology is reliable. And we actually have to take the approach that they could be very negative. We approach them and then we show them and walk them through every single part of the process of how we design the business, how we design the security of our end user assets. And then from there, they actually open up a lot more, right? So not only do we have to be compliant and regulated globally, we have to do so both on the crypto side as well as the fiat side. So sometimes customers have balances and accounts where they deposit through a fiat channel instead of directly through a crypto channel. And when that happens, it actually creates a new set of rules. So compared to DEXs, I think centralized exchanges are facing a very, very big challenge when it comes to regulation. But I think that we've come a long way, and in certain areas of the world, like in Asia, a lot more clarity has been provided, and we're quite happy for that. We're quite bullish on that.
Yeah, for DeFi, I think it's unclear what regulations are coming, but that's certainly happening from what we understand in the US. But so what like Uniswap and DYDX and are trying to do, and what we are trying to do, it's kind of similar. We want to decentralize orderly as much as possible, and to make it like a public infrastructure, right, with its own economics and such, so that it's community governed, right? It's governed by the stakeholders and the contributors. It's not centralized. So to make it as decentralized as possible, so that it's more like Ethereum, instead of an exchange for us, and it's built on blockchains that are decentralized, and the code is going to be open source, and it'll be governed by not by us as a central party. So I think that's what we aim to do, and I hopefully regulators will regulate the applications and not the protocol, right? Like in the case with the internet, how they regulate like Gmail instead of SMTP, HTTP, and such, and they leave the protocols free, but the applications get regulated. So and that's how we think it's likely to play out. But depending on how decentralized the DeFi protocols are.
Yeah, I think talking about regulations, like, a centralized exchange, you have to do KYC, right? But for DEX, that's a different story. But like, we've seen people talking about, potentially they want to do like KYC even if you want to use a DEX. So what do you guys think of that?
Yeah, so we're actually talking to different solution providers for this. I think there's two main ways that we're seeing now. One is completely permissioned blockchains, right? Like Avalanche, Subnet, or any of the new layer 2s, they spin up a chain that's fully permissioned, whitelisted for institutions and their clients, which I think that model is not perfect, but I think the one that's better is actually just whitelisted addresses or soulbound tokens to those addresses representing like accredited investors. So then that you're not limiting everything to a chain. So I mean, there's different people providing these types of solutions, and we're looking into that. I think that's going to come for sure. Yeah.
All right, I don't think we have much time left. Maybe just something short. What are you guys bullish on maybe in the next year or the next 2 years?
I think that having seen, everybody here has seen what Bitcoin and the entire, I guess, crypto industry and the price of crypto assets has gone through in the last 2 or 3 cycles. I think that one of the largest and final transfers of wealth when it comes to TradFi into, say, DeFi or crypto will take place very soon. Will take place in the next few years. Could be faster. So we're already in a rush. We're already very bullish on what this industry has to bring, and we're continuing to build now. And we encourage everybody here to continue to do that through any sort of market cycle, especially this one, and that the opportunities for innovating and building and providing something of value to the world does exist, and it's happening right now. So we're congratulating everyone to be here in Vietnam. It's a place that we love as a company, as a team, and we want to meet more and more builders that are out here.
Yeah, what Henry said, and we're super bullish on DeFi, and just essentially, what wouldn't even call it DeFi later, just finance, just all of traditional finance is on the blockchain. I'm very bullish on that concept, and I think one day it will come, and just keep building.
All right, thanks guys. I think that's all the time we have today. So just want to say thanks for speaking today, and yeah.
Thank you so much for your sharing. Please step forward for the group photo. Thank you. Vâng, thưa quý vị, vậy là chúng ta đã trải qua 1/2 chặng đường của ngày thứ hai của sự kiện GM Việt Nam. Và trước khi chúng ta quay trở lại với những panel discussion vô cùng thú vị, thì Thủy Tiên xin mời quý anh chị chúng ta có thể tự do nghỉ trưa và quay trở lại vào lúc 1:30. We're gonna start our event again at 1:30 p.m. So please take a rest and then come back later. See you soon.